Hey everyone, welcome back to my channel. In this video, we're going to be going over strong and weak highs and lows. And you're probably wondering, why is this important to know? It can help you with good entries because it can help you anticipate movements in the market, and it can also minimize the amount of times you're actually getting stopped out. I'm going to keep this video relatively short, and I'm also going to keep it super simple for you guys, of course. So with that being said, guys, let's get straight into this video. Strong and weak highs and lows are so important. So if you're someone who feels like you're always getting stopped out and looking something like this, keep on watching this video. And this is all just based off of market structure. And the reason why I said in my intro, it can help you anticipate retracements is because if you know a low is weak or a high is weak, you know most likely it is going to be ran through, or price is going to take it out. And I'm going to show you some examples of this. So if you aren't making sense of that yet, do not worry, okay? So we're going to start with weak highs and lows. When it comes to understanding if a low is weak, it is all based off of market structure. So you're always going to be at some type of support zone when we're talking about weak lows. So when you think about weak lows, guys, I want you guys to think about a support zone. We're always at support when we're talking about lows, because you usually do what, guys? You buy low and sell high. So we want to pay attention to the lows if we're anticipating or thinking that the market is going to go to the upside direction, or we're going to get in for buys, okay? That being said, in this example, guys, we have a support zone that's right here, okay? And so I want to draw something and show you guys something, okay? The way I like to define weak lows is price failing to break previous highs or high points. Because like I said earlier, at support, we usually like to look for buys, right? And for buys, we need what? We need higher highs and higher lows to be created. That being said, we need previous highs to be broken in order for price to create a new higher high. And if price is failing to do so, we may anticipate that the market does not have strength to, buy yet, or that lows could potentially be weak. And so I want to show you this example, okay? In this example, the low that is so important is going to be this one right here, okay? This low is so important. And the reason why this is important is because we want this low that was created to break structure, to take out this high, to create a new higher high, because we know that for buys, price creates higher highs and higher lows. So in order for price to create a new high, this high here has to be broken. So when you guys see something like this and you see price failing to break structure, and I usually really like to look at this on the 15-minute time frame. So when you see price failing to break structure and it's failing to break, what is the only option for price to do? It is going to sell down. And when price sells down, this low that's right here is so important because it may now be considered weak. And because it's failing to break this previous high here, doesn't it make sense that this low isn't strong? Because if a low is actually strong, guys, it will just have the strength to, push past this high and just create a new higher high. So when it comes to lows, okay, weak lows equals no break of structure of a previous high when it comes to buys. Because again, we buy low, sell high. So anytime I'm talking about lows, it has to be talking about highs, okay? We're talking about buys. So price is failing to break this previous high here. The only option for price to do is come back down. And so that means price could potentially take this low out and then reverse into the opposite direction, or it may continue pushing down. And this is why a lot of the times when people place trades, they may think that, breaks of structures are happening, and then they get into the trade and then they get stopped out. And it's just because of they're not understanding that low that was created wasn't strong enough. So price has to come back down to see if it can create a stronger low that can finally push through that high. So in this example, it'd be like something like this. So people would probably be like, you know, they want to end it for a buy, you know, they have their thing, and then, you know, let's just say they get stopped out. Another reason why it's so important to pay attention to weak lows is because what else do we really use lows for? Why do we pay attention to them? And if you wanted to, you know, answer in your head or be like, yeah, go ahead. If not, that's okay. I'm going to tell you anyways. But liquidity. Because if you guys watch my liquidity video, or if you just have a general understanding of liquidity, lows are going to be taken out for buy. So automatically, anytime when I see price failing to break a previous high, I am watching that low because price could use it as liquidity. And if it uses it as liquidity, it may now have the strength to later fly up. And this is why it can help you get good entries, because if I know, okay, price is failing to break this previous high, okay, price does not have enough strength to push past this level here yet, okay, so what's the second option that price could possibly do? Okay, price could reverse, okay, it could take this low out, use it as liquidity to then finally gain that strength to push up, okay, it could just come lower. It might not always, you know, take this high, take this low out. It could slightly stay above it, but regardless, it is going to come back down to try and gain more strength, I like to say, to then reverse into the opposite direction if it truly wants to buy. Okay, so when you're at a resistance, you are already anticipating or usually that there's going to be a sell move, usually, okay? So that being said, guys, so in a bearish market, we create lower lows and lower highs. So I want to mark something similar to the bullish market. So we're here, okay? Let's just say we are here, okay? And then price comes back down. We get stopped out. Oh no. And then price decides to finally go into the direction that you wanted it to go all this time. And you're like, damn, I knew it was going in that direction. I just entered in too early. And this is why understanding weak highs and lows can help you get the best entries, because now you're anticipating market movements that are going to happen at a level of resistance. So let's just say we are creating this price action here, okay? Price, you know, pushed up, came to this level, you know, tested here, came back up, and then sold off. You know a high is weak if it's failing to break low points in a bearish market. The reason why you know the high is weak is because we should be breaking structure and creating new lower lows in a bearish market. And if we're failing to do that, automatically you should be thinking price does not have strength to push down. And if price does not have strength to push down, what is most likely price going to do? It's going to find strength. And how does price usually find strength? In a form of liquidity, because liquidity is orders in the market. And when liquidity is taken out, price usually has, or the market usually has, the strength to move in the upside direction or the downside direction, whatever it is. So in this example, when price was failing to break this previous low, automatically what you should be thinking in your head, okay, we're failing to break this low here. We need price to break lows for sells. If we're failing to break this low here, what is the only option for price to do? It may come up here. And what high is really important then? This high here. Because not only is this high weak, but price can use it as what? Liquidity. Because you're always paying attention to highs for sells, because price could use it as liquidity, and price, you know, may come close to it, so you could get a better entry and not get stopped out. Because we came here, okay, failed to break, okay, price does not have enough strength, so we might take this high out, use it as liquidity, and if it holds, what is gonna happen, guys? If it holds, baby, we fly. Now we're not gonna fly, but we may fly though. Okay, but you know, we're selling down. Or, you know, like I said in my buy example, price may not always take this high out. It could stay slightly below it and then sell back down. Okay, but you want to pay attention to this, because if price is failing to break lows, you know that price may come back up towards this high and do some type of reaction. Guys, I want to show you guys strong highs, because we're already, you know, on this resistance example. So let me show you guys, okay? Strong highs are usually going to grab liquidity and break structure. Usually in the markets, when we see liquidity sweeps or liquidity grabs, however you want to say it, when price holds, price usually is strong at that level. It's usually strong, right? We came to this level of resistance, okay? We came down here, failing to break this previous low here, okay? Because we're failing to break lows, okay? sellers might not be in control or they don't have that strength yet, right? So they're going to push price back up, okay? Potentially taking out this high, maybe not, okay? But in this example, it took it out, right? And because it took liquidity out and it held here, this high is now considered strong. And this is why I say strong highs are going to be ones that grab liquidity and break structure. We can see that later price ended up now having the strength to not only, push down, but it now had the strength to do what, guys? Take these lows out and create what? This bearish market that we wanted. You start seeing price finally breaking low points and breaking structure, especially after a high was created. Most likely that high is strong. So some of you might be thinking, wait, Meeks, didn't you just say that strong highs grab liquidity and break structure? But you also said that price may not always, take the high out here when price does not have enough strength to, take this low out yet. And we might see price look something similar to this. In this case, how I want you guys to kind of think about it is, okay, so we have this level of resistance here. Price is failing to break this low point here. Okay, so price is just going to do some type of correction, okay? And because price already corrected here and it held here, it didn't need to take this high out because price already had enough strength. Once it came here, it came back up here and took you out, because it definitely would have taken some traders out who would have, gotten maybe a little bit early. Once price came here and finally kind of realized, oh, I do have strength. I don't have to take this previous high out. I have strength. Okay. And once it broke structure, okay, so breaking a low point, once it broke structure, that's the key thing. Once price broke this level here, it would now be considered a high, a strong high. Okay. But it came, okay, it didn't have enough strength in the beginning to, push down here. So it took some people out by pushing up. Okay. But then price, didn't break or take this high out and use it as liquidity because it already had that strength. Okay. And because we're staying below this previous high. Okay. And then because we broke structure here, breaking structure of what? A low, which is what? Which bears make lower lows and lower highs. Price now has that strength to push down. So this high is now considered strong. I hope that makes sense. If you have to watch this part 100 times, watch it 100 times. But that is the best way I can kind of explain it and go about it. But pay attention to those two highs for sells, and also making sure that low points are being broken, because this also can confirm that price is actually respecting structure and is actually going to sell down to potentially hit your TP. In this example, okay, so we created this level of support. Okay, price pushed up here. Okay, it came back down. Okay, it tested this level of support again. Price shot up and it failed to break this previous high here. We need highs to be broken in sells. If we are failing to break a previous high, guys, what is the only other option for price to do? It is going to come back down, okay? And this is why I say look at lows, because price could potentially take lows out to then reverse into the opposite direction, okay? So when price is failing to break a previous high, you should be anticipating that price does not have enough strength. And if you're anticipating that price does not have enough strength, then price is going to do some type of correction. It could be minor or major, to then, collect more orders to see if it can finally do the intended movement or reaction it wants to do. Okay, so we failed to break. So price is going to do what? It's going to come back down. Okay, it ended up taking liquidity out. Okay, and because it took liquidity out, okay, after it took liquidity out, what are you waiting for next? Once price takes liquidity out to confirm that price is pushing into the direction you want it to, you need what to occur? Breaks of structure, okay? And if you don't understand breaks of structure, I have a video on breaks of structure. Please go watch that, okay? So that being said, price came down here, okay? It held here. That means it's considered what? Liquidity. So what are we waiting for now? We're making sure that high points are being broken continuously in a bullish market, because we need price to break previous highs to create higher highs and higher lows in a bullish market. That being said, when price took this low out here, took these lows out here, or this low, whatever you're paying attention to, once price took this low out, okay, it then held, pushed up, and then look what finally happened, guys. We finally took these highs out. We finally did what? Broke structure of high points. And because we broke structure of high points, we can now think about, okay, that we can now say that this low here is now considered strong. Okay, so this low is now considered strong. Okay, because what did I say? Strong lows and highs are, they're going to grab liquidity and break structure. Okay, BOS means break structure. Gonna grab liquidity, took those orders out. Okay, and once it took liquidity out, it broke structure, because breaking structure meaning it took out high points, which we want for buys. Okay, oop, I didn't mean to mark this as liquidity either. Sorry guys, I meant to make that as BOS, break of structure. Okay, break of structure occurred here, so this low here is now considered strong. So price should be respecting this low that's being created and continuing pushing up, creating bullish structure, something like this. Okay, so we're gonna create higher highs and higher lows continuously. Okay, came out here, boom, and we should be able to continue pushing up, continuing this pattern. So just to recap, strong lows, you're going to be looking at support because you want to buy, right? Strong lows are going to grab liquidity and break structure. If price does not end up grabbing liquidity, you just want to make sure that the low that price created, that price ends up breaking structure. So it's breaking previous highs. Once price starts breaking previous highs, you can automatically start thinking that price is that those lows are considered strong. Okay, in a bearish market, you are looking at a resistance. You usually sell at resistance. You want to make sure that lows are being broken. Okay, if price does not grab liquidity, just make sure that that high that was created, price ends up, breaking structure to the downside, aka breaking low points to create what? Lower lows and lower highs. Okay, so that being said, guys, I want to get into true examples of what I just talked about. Guys, okay, I told you guys, strong lows grab liquidity and break structure. Okay, sometimes liquidity won't be grabbed and price will stay slightly above it. But if that happens, you just want to make sure that price starts breaking previous highs to start creating higher highs. Okay, that being said, guys, we're looking here. So we have a high here. Okay, do you notice that when we created this level of support, I'm going to mark this as a circle here, that price failed to break these previous highs here? Okay, and you might think that, okay, we broke this high here, right? Okay, but if you are thinking long-term buys, meaning more past this level here, you need this level to be broken, right? You need it to. And if price is failing to break this level, guys, what is the only option that price is going to do? It's going to sell down. It's going to correct. It's going to do some type of movement, right? So what are you paying attention to as a trader? You are paying attention to lows. So because you knew that, okay, price is failing to break this level here, I'm going to anticipate we don't have that strength. Okay, so if we don't have that strength, we're going to come back down here. We may take this low out. We may stay slightly above it to then reverse into the opposite direction. So that being said, guys, you are literally watching, you are seeing, okay, we came here. Let's kind of wait for price to continue, coming back down. And eventually we want to start seeing high points to being broken to confirm what? Buys are actually happening and price can, push past this level to hit maybe, let's just say, a level like this. Okay, so let's watch it. Okay, so we're watching it again. Let's just say you as a trader, you're like, oh, but Meeks, why is this low? But price started creating like a minor support zone here. Like maybe this low is strong. What did I also to say that price needs to do? If you have confirmation that price is breaking high points, okay, that could possibly be valid. But for me, nothing crazy is happening yet. So I know that price most likely is going to push lower. So if price is going to push lower, what am I looking at, guys? Looking at the low, because you're looking at lows for buys. It's because it could be used as liquidity. Again, it might not be used as liquidity and price could potentially, come slightly above it to then reverse into the opposite direction. And if this happens, you can tell. You'll know just by how price breaks, because once price does this, it will immediately start doing what? breaking previous highs like this one here to then, push up into the opposite direction for buys, right? That being said, let's keep watching. Let's see what ends up happening. Okay, beautiful. We took this low out, guys. Ooh, see, and this is what I mean. Some of you guys would probably come here. You would have probably, put maybe an entry position here, and then, TP whatever here. But if you had just paid attention to these highs here and notice that price isn't breaking here, and you start thinking, okay, we don't have the strength there. What should I be really focusing on? These lows down here, okay? This, you would have avoided getting, potentially stopped out, because this used to happen to me so frequently, and I was like, why does this keep happening? I'm getting the trend right. Like, I'm getting it right. I'm getting the direction right. I'm just entering in too early. And the reason why I was entering too early was I wasn't paying attention to whether or not a low or high was strong or weak. Because if it's strong, okay, then I know price is gonna hold. You can potentially hold that trade. But if it's weak, you're gonna anticipate price is gonna reverse into the opposite direction to do some type of movement, whether it's collecting orders or not, to then finally get that strength to do to buy or sell, right? So in this example, this low was taken out, okay? We held here. What do we need to see immediately? Not immediately, but we need to see what? Breaks of structure of high points, or if you are in a bearish market and you have no price action to the right here, like right now, there's no high points that I kind of want that's really near current price. Like, I don't want to wait all the way here. Like, I want the best entry possible. So you need what? Breaks of structure of low points in a bearish market. You can look if you have no price action to the right, okay? Price action meaning candles, guys, okay? That being said, I'm going to see, are we going to take this, let's slow out here. Okay, next candle. Tapped here, okay? Not break of structure yet. If you don't understand why that's not a break of structure, please watch my video on breaks of structure, okay? Finally, we get that, okay? This level is now valid, and what do we now want? We want price to continuously break previous highs, guys. Previous highs, okay? That being said, we're going to TP here. Let's just say, beautiful. Mark highs that we want broken. So we want this to be broken. And we want this one that's already marked. And I also want this level to be broken. Because this would be a great retest level for price to do what? Continue pushing down. Because if you understand structure, what? Look at this. Lower lows and lower highs. So if price wanted to create a lower high, this level would be a great level for price to do it and then to, continue selling down. So I also want this level to be broken as well, guys. Okay. So I encourage you guys to obviously, practice this, of course, when backtest this, so you guys can get familiar with this, because it's really actually pretty easy to catch. And once you catch it, you're like, damn, like she right. But okay, so we're in tapped in down there, but that's okay. But let's just, keep playing. Okay, I'm just gonna play a little faster, guys. I'm a little impatient, which is crazy because I'm a trader, but okay, look at this, guys. Look at this. Oh my gosh, let's go, gold, let's go. Push. Oh my gosh. I always say that even in my trades, like my live trades, I'd be like, push. Broke here. So what do we know? Price is going to keep pushing up. And in price action, when you are in this trade, you are also going to be paying attention to this, right? Look at this. So I want to zoom into this because this is important. Okay. We broke structure. Beautiful. Okay. We broke here. Beautiful here. Look what we failed to do again, guys. We failed to do what? Break this level here. So what is price going to do? It's going to come down to what? Take out orders, right? And what low are you looking at? This one here, right? So I'm going to mark this here, okay? And like I said, price could take this out. It might not, whatever it does, okay? So what price did, it stayed slightly above it, okay? Then it finally, pushed up, but then it wicked again. So what are you looking at now? You are looking at what low? You can look at this low, but you can also look at this low. They're pretty close together that it's like, it really doesn't matter. I guess I wouldn't be too picky, to be honest, as long as you just understand that you are looking at this area, because now price could use it as liquidity, to then reverse in the opposite direction. So price actually ended up, maybe this was news, I'm not sure, but price, look, these wicks were crazy. Oh my gosh. So price, failed to break again. So it had to collect more orders. So what did it do? Took out these lows, okay? Then it held. Then once it held, it finally had the strength to break high point. So it finally broke this high, and it also broke this high to then what? Hit our TP. So that is all it is. And that's why if you can understand this, it is so beneficial, guys. Okay. So you guys can see that we are failing to break lows here. Price failed to break this low, failed to break this low here. Because price is failing to break lows, guys, price is going to come back up and do some type of reaction to then possibly reverse into the opposite direction. When we do not break lows, guys, the only other option for price to do is push up. And we need lows to be broken for sells because price creates lower lows and lower highs. So I'm just going to put these lines here. These are like my TP points for later, but yeah, we'll put them there. Sorry. I'm just going to move this one. It's kind of sorry. That was a little messy for me. I don't know. I got stressed out. I was like, maybe I'll do this one here. Yeah, this is a little better. I don't like a lot of stuff on my charts, guys. If I get stressed. But anyways, okay. So we created this low here. We created this low here. Price is still not breaking structure. So what are we paying attention to, guys? We are paying attention to highs. Okay. So this high here. Okay. Because this is a lot of like wicks in this area. Both these highs are valid. Like whatever high you want to pay attention to, like it's valid. This one or this one. Okay. So that being said, you're going to watch to see, okay, if price, comes back up to potentially use it as liquidity or stay slightly below to then reverse into the opposite direction. Because if we're failing to break previous lows, we are not strong enough to sell. So price is going to push price up. Okay. So we push price up. Okay. And then once we start breaking low points after that, then that is confirmation that that these highs up here are considered strong. So I want to, start looking, because there's no price action to the right, I want to start looking at points that I want price to start breaking. And sometimes I like to, this point here. Okay. So if you're wondering why I marked this point, the reason why is because this is a low point in a bullish market. So I want lows to be broken. So when there's no price action to the right, or AKA candles, candles, I just look at low points in a bullish market. So this is a bullish market, higher highs and higher lows. This is a low in a bullish market. If you guys can see that is a low. Let me just zoom in a little bit. That's a low right there. I could even move it higher, but still the same thing. Okay. So that being said, we want to make sure that lows are being broken. So let's see if we take this high. Okay. Let's continue watching price. Okay, we tap into that zone. Okay, it looks like, price is starting to break low points. Okay, let's continue watching. Okay, we started to break. Okay, not a full break of structure yet because we see more wick than body. Okay, let's see what the next candles bring. Okay, boom. Okay, and this is another example. Look, price held here. So what's the only option if price held here? Because it didn't break structure, it's going to come back up here. Okay, and if it comes back here, it could take out these highs, like these highs over here now, to then reverse in the opposite direction. Okay, but it held nice here. We're finally breaking low points after price, stayed below these previous highs here. We didn't actually grab liquidity of these highs, but you could say that, price took out these highs and that was like your liquidity. Whatever you prefer. I like to look at the bigger highs, meaning like the more major highs, but that still is valid. Okay, however you want to go about it. That being said, because, we're respecting these highs here, I now considered these levels to be strong. And because these levels are strong, I can now definitely see price doing pushing down to down here, right? To the south side. So was created here. Okay. These highs here that let me just go on the 5 minutes so you can see them a little bit more clear. You can see these. Oh, now you can see it way more clear. Okay. So these highs here that were created, they were failing to break low points. And because they were failing to break low points, these highs here are now considered weak. And if they're considered weak, price is just going to take them out. But if you were also looking at these major highs, you notice that price ended up staying below it. It's staying below. It didn't end up grabbing liquidity of these highs. So these highs are actually considered strong. And because these highs are considered strong and price, came back up, took these highs out, it held here, okay, staying below this previous low, this previous high, creating a lower high, which price does what? Create lower lows and lower highs in the bearish market, we can now classify this as, you know, this could be like, if you were on the 5-minute, you could say that this was the liquidity sweep here of these highs here. Price ended up holding and it started breaking structure of low points, which is what we want in a bearish market. And because it started doing that, we can then anticipate that price is going to, you know, sell down. So that is basically how strong lows and highs really work. So I encourage you guys to really practice this and just backtest these examples. But these are the two major examples that you're going to see. Price may not take liquidity out. It may stay slightly below it, or price may just or price will, you know, grab liquidity to then reverse in the opposite direction. Always make sure low points are being broken for sells, and high points are being broken for buys. If price is failing to do so, you know, you want to pay attention to see if those highs or lows that were being created, if they're weak. Because if they're weak, they're going to be taken out most likely, or price is going to come near them to then be able to what? Have that strength to go into the opposite direction, because price finally has that strength and that, you know, power to. Thank you so much for watching. If you enjoyed this video, please like, comment, and subscribe, and I will see you guys in my next video. Bye guys. Thank you so much for watching.